Day Junior Tikkies, I'm Mrs. Brimacombe. We're going to look now at Chapter 1, Cash Journals of a Trading Business, Activity 2. You are provided with the information relating to Playball Suppliers. Playball Suppliers sells soccer balls. The business uses a fixed markup percentage of 75% on cost. The business is owned by Max Ruler. Required: indicate the influence that each of the following transactions will have on the accounting equation. Use the table provided to record your answers. Question number 2. Calculate the following: the number of soccer balls at the end of January 2024, the value of your trading stock on 31 January 2024, the gross profit made on 31 January 2024. Question number 2.3. Refer to transaction 5. Calculate the amount paid to Multisport if they had granted Playball Suppliers a 3% trade discount. Question 2.4. Refer to transaction 7. Calculate the following if Playball Suppliers granted customers a 5% trade discount. What is the amount received after trade discount was granted to customers, the cost of sales, the markup percentage achieved? So this activity is to illustrate the new transactions regards to a trading business. And what you need to remember with a trading business: number 1, there's a cost. How much did it cost me to buy from the supplier? Number 2, there's a selling price. Because I want to sell it for more than what it cost me, we add a markup percentage. And in this case, they said to you it was 75%. So these are the transactions that we now need to record on the accounting equation. And while doing the accounting equation, I'm going to show you the T account. If you are not sure how to complete it on the accounting equation, do a T account and get it 100% correct. So the first transaction said the owner transferred 150,000 cash into the business current bank account. So this is not new to a trading business. This was also done in a service business. When the owner provides money to the business, this will always be shown as capital. It's part of capital contribution, but we don't show it as capital contribution, we show it as capital. So when the business receives money, bank will always be debited and the rest will be credited. So on my accounting equation, account debited bank, account credited capital. Bank is regarded as an asset which will increase and owner's equity will increase. Take note the accounting equation, the manner in which it was given now. There's a column for the amount, then it's not required to write the plus with the amount. Then you can only write the effect it will have on the accounting equation. Number 2. Bought 360 soccer balls at $180 per soccer ball for Multisports wholesalers and paid by EFT. So my business is selling soccer balls. So I'm not going to write soccer balls. This will be called my trading stock. So the 2 accounts involved is bank and trading stock. But what was the cost of this? So we purchased 360 soccer balls at 180 Rand each. So the total cost is 64,800. When a payment is made, because it said paid by EFT, bank will always be credited and the rest is going to be debited. And again, I'm going to say, I cannot say soccer balls. That soccer balls will be called my trading stock. So bank is credited, the rest is debited. And when we show it on the accounting equation, we apply the same principle. Bank is credited from the CPJ and the rest is debited. What did we purchase? We purchased trading stock. The amount 64,800, and this is why classification of accounts is so important. Both is regarded as a current asset. That's why it's plus minus. Nothing owner's equity, nothing liabilities. The third one. Sold 150 soccer balls to the local school. The money was received by EFT. So you can now immediately see there's 4 accounts involved. And I've included the information where they told you the markup percentage. Because number 1, I need to show what was my selling price. My main income in a trading business is sales. And when we say that we sold goods, I'm going to say I sold it for how much money am I going to receive in my bank account, and what was my income from that. Then I need to show, but what was the cost? And to show the cost, we need to open up an account called cost of sales. That means the cost of the goods that we have sold. Goods refers to trading stock. So cost of sales is regarded as an expense. It will decrease my income. Why? Because when I'm selling it for 100 Rand, it doesn't mean I'm making 100 Rand on that item which I sold, because there was a cost involved in getting that item from the supplier and selling it to the customer. So this is what is so important to understand. To show the selling price, it means that bank and sales is involved. To show the cost, trading stock and cost of sales. There's 2 reasons why I want to show my cost. Number 1, I need to calculate my gross profit, sales minus cost of sales. Number 2, in a perpetual inventory or continuous inventory system, I'm keeping track of my trading stock when I'm buying and when I'm selling. So if I'm selling, my trading stock is going to decrease. So now the cost of those soccer balls was 180. How many did I sell? 150. So the total cost is 27,000. Cost of sales is debited and trading stock is credited. Now to work out the selling price, I've got 2 different ways in which I can work it out. I can use 180 times 175 divided by 100. Or I can take the total cost and I say cost times 175 divided by 100. We will get exactly the same answer. What you need to understand, I sold 150 units. This was the cost per unit and this was the selling price per unit. That is the income that we will get from selling 150 soccer balls. That money will be deposited and paid into my bank account. And this is nothing new that you've learned from the cash receipts journal. Bank will always be debited and the rest will be credited. Now there's an exception when we're looking at cost of sales, because cost of sales is an expense to the business. But this we'll get to a little bit later on when we complete the journals. For now, it's important to understand that we've got the selling price and we've got the cost. The selling price goes to bank and sales, which will have a positive effect on my assets, and that income will have a positive effect on my owner's equity. The cost price will always go into cost of sales and trading stock. These 2 are BFFs, best friends forever. Trading stock is regarded as an asset, which means my assets will decrease. Because my expense increase, it will have a negative effect on the owner's equity. Then the next one, received a loan from GL lender, 60,000 at an interest rate of 8% per annum. So if we've received money, bank is involved, which means bank will be debited, account credited, loan. You have to be specific by writing the name of the bank. So on my accounting equation, we're going to indicate that our assets will increase with 60,000 and our liabilities are going to increase with 60,000. This is not new to grade 9 learners. This is a transaction that you've done in grade 8. The only new transaction is the buying of trading stock and the selling of trading stock because we are busy with a trading business. Day 5. Purchase 70 soccer balls from Multisport wholesalers at 180 per soccer ball and paid the outstanding amount via EFT. So if a payment is made, bank is involved. What did we purchase? Soccer balls is our trading stock, which is regarded as a current asset. Now there's a calculation involved. We've purchased 70 soccer balls at 180 Rand per soccer ball. So the total cost was 12,600, by which my trading stock will increase and my bank account will decrease. My current assets will decrease. On the accounting equation, account debited, trading stock, account credited, bank. And think about it. When a payment is made, it's shown in the cash payment journal. From the cash payment journal, bank is always credited, the rest is debited. Both is regarded as a current asset. That's why it's plus minus, owner's equity 0, liabilities 0. Transaction number 6. The owner takes an amount of 2,500 per EFT for personal use. Anything that the owner takes for personal use is regarded as drawings. This is the business entity principle that is applied. The owner's personal finances must be kept separate from the business. When the money is taken from the business, bank will always be credited and the rest is debited. Assets will decrease, owner's equity minus liabilities, nothing. Number 7, sold 200 soccer balls cash. So again, there's 4 accounts involved. Why? Number 1, the selling price. Number 2, the cost. To show the selling price, bank and sales are BFFs, best friends forever. To show the cost, trading stock and cost of sales. Now, there's a calculation involved. So to calculate the cost, we sold 200 soccer balls at a cost of 180. So the total is 36,000. We applied the double entry principle. For every credit, there's a debit. To work out the selling price, there's 2 ways in which I can do it. I can take the total cost, 36,000, times 100, 100 plus 75 divided by 100, or we can take the unit price, which is 180 times 175 divided by 100, and then we're going to say 200 soccer balls was sold at a selling price from 315. Take note, these 2 will always represent the cost. Bank and sales will always represent the selling price. To start with an accounting equation, we start with the selling price, which means from the cash receipts journal, if the business receives money, bank will be debited. Why did the business receive money? Because of sales. That is our main income in a trading business. The amount, 36,000, assets plus. Because my income increases, it will have a positive effect. To show the cost of sales is an expense which is debited. Trading stock is an asset, which means my assets will decrease. Where does it decrease? On the credit side. That's why we've got minus. Number 8. The business paid 1,800 via EFT to the local station for promotional purposes. So this is one of those now which is a little bit more challenging. If the business makes a payment, the easy part is to identify bank is involved. For promotional purposes, this will be shown as advertising, which is regarded as an expense. If a payment is made, bank will always be debited and the rest will be debited. I'll say again, bank will always be credited, the rest will be debited. So advertising is going to be debited. Assets minus, because my expense increase, it will have a negative effect on your owner's equity. Question 2.2. So we need to calculate the number of soccer balls at the end of January 2024. So we need to look at all the transactions related to soccer balls. When did we buy and when did we sell? And they set the number of soccer balls. So we only care about the total soccer balls bought and the total soccer balls sold. I don't care about the selling price now or the sales or the cost of sales. So to start off with, we bought 360, then we sold 150, we purchased another 70, and then we sold 200 soccer balls. This means that we've got 80 left over. And now I want to show you on a T account, if you look at the trading stock account. Now we're just looking at the value. We purchased, that's why it's bank, 360 plus 70, which is 450. We sold, which means our trading stock will decrease. What was the cost? And now we're looking at the units. We sold 150 plus 200 units. So take the number of soccer balls purchased minus the number of soccer balls sold, and that equals the 80, which is left over. I said to you earlier, there's two reasons why I want to show the cost. One, I want to calculate my gross profit. Two, I need to keep track of my trading stock. How much do we have left over? What is the value of my trading stock? This means we need to show when we buy, we need to show when we sell. Then it said, but now what's the value of your trading stock on 31st of January? So if I've got 80 left over and the cost was 180, it means the total value of my trading stock was 14,400. To show this to you on a T account using trading stock, we've purchased 450 at 180 per unit. So the total cost of the items purchased, the soccer balls purchased, 77,400. The cost of sales of those 350 units that we sold at 180 Rand per soccer ball was 63,000. Take the total purchase minus that which we sold, how much is left over, and that is 14,400. If you take 14,400 and divide it by 180, you should get 80. If you take that, divide it by 80, you should get 180. If you take 80 times 180, which we said, it gives you 14,400. This is to show you why it is so important to understand that the trading stock account is always at the cost. We can never ever show the selling price in the trading stock account. This account will always be, but what was the cost of the goods that we purchased? What was the cost of the goods that we sold? And that's why we create an account, which is a non-cash item, cost of sales. It's an expense to the business. To calculate the gross profit made, we just take the total sales, which means now cost of sales, 36,000 times 70, not the total sales. We take the cost of sales, 63,000 times 75 divided by 100, and that equals the total gross profit. There is an alternative way. You can calculate the total sales, which means take 63,000 times 175 divided by 100. But then you still need to take the total sales minus cost of sales equals the gross profit. So this is just a much quicker way in getting to exactly the same answer. And that is, but what is the gross profit which we made? And this comes back to what we've done in activity 1, knowing how to do the cost calculations. What is it that I want to calculate over what has been given to you? Question 2.3. Refer to transaction 5 and calculate the amount paid to Multisport if they had granted Playball suppliers a 3% discount. Now, trade discount means that we paid less on the items purchased. So, if I refer to transaction number 5, we purchased 70 soccer balls and the cost was 180. This means 100%, which is the total cost, minus 3% discount, means that we're only going to pay 97% of that total. There is an alternative way, which is the longer way, by taking 12,600 and then you have to times it by 3%, but then you still need to subtract that 3% from the 12,600. But at the end, we'll get to exactly the same answer. Number 2.4, refer to transaction 7. Calculate the following if Playball suppliers granted customers a 5% trade discount. So remember that trade discount can be given to customers and trade discount can be received. In this case now, we have granted our customers a 5% trade discount. So now we need to go back to transaction number 7. We sold 200 soccer balls for cash, which means the amount that we're going to receive after the trade discount was granted to customers is 200 times the selling price, which is 180 times 175 divided by 100, which is 315, which is in total 63,000. So that is the same that you got earlier, but now trade discount was given to customers, less 5%. So you can now take the long way and take 63,000 times 5%, or you can say 63,000 times 95% of that total will be paid by the customers. So we are only going to receive 59,850. But now, very important, when we calculate the cost, it is always calculated on the original selling price. The original selling price was 63,000. To calculate the cost, we times it by 100 divided by 175. So my cost is 36,000. Now you would see the markup percentage that we've achieved if we take sales minus cost, so there's your sales, minus cost divided by cost times 100, means the percentage was 66.25%. Now, this is what we've actually achieved. Why have we not achieved our end markup of our 75%? It's because trade discount was given to customer. We sold it to customers. We sold it for less than what we wanted to. And that's why the markup percentage achieved was only 66.25% and not 75%. So this question illustrates to you the effect that it will have if you grant customers discount. Your cost remains the same, but the selling price, I've now sold it for less than what I wanted to. If you round that off to one decimal place, it will be 66.3%. I hope you have a better understanding of the new cash transactions related to a trading business. Everything you've done in grade 8, all those types of transactions, you will do in grade 9 as well. Now we've added, because we are busy with a trading business, so the new transactions, 2 new transactions that we've added now is when we're buying trading stock, and number 2, when we are selling trading stock. And how would we indicate it? What is very important to remember, know how to calculate the cost if the selling price is given. Know how to calculate the selling price if the cost is given. Know that when I'm selling goods, that the selling price, if it's cash, will always go into bank and sales. The cost will always be indicated or shown in trading stock and cost of sales. Why? I want to know what is my gross profit, sales minus cost of sales. Number 2, I want to keep track of my trading stock, and that's why I need to indicate if my trading stock decreases because I'm selling goods, what was the cost of the goods that I've sold. I want to leave you with this quote. Every student can learn, just not on the same day or the same way. Have a wonderful day. Thank you very much.